U.S. stocks tumble on the week jobs report. There we are looking at a live shot of the action happening down at the New York Stock Exchange on the big board. The Dow Jones Industrials down 204 points after the government report showing U.S. job growth slowing down in the last month significantly. And of course, the unemployment rate also to be climbing higher at 8.2%. Good afternoon, everyone. I'm Kelsey Hubbard. Welcome to Lunch Break. Sorry to have to bring you in on such unfortunate news, but of course, we've got Paul Vigna here to sort of sort it all out for us.
The Markets Hub
anchor that brings it all to us every day. And Paul, this obviously was not a welcome news for anyone this morning.
It was much worse than really almost anybody expected. And it was a very bad sign for the economy at a time when the U.S. economy is a very, very fragile state. What's really bad is we had bad signs from overseas overnight. These manufacturing reports out of China, out of Europe, they were all bad. Europe, obviously, with the sovereign debt crisis, everything was looking bad. This jobs report, no one really expected it was going to be a great report anyhow, but it was much worse than people thought. And now you have people, just an entire recalculation of what's going on in the United States. And you can see it reflected in the stock market.
Yeah, and we also are looking at the Treasury yields had a big drop. We're seeing a big jump in gold. So obviously people are panicking a little bit.
Yeah, I mean, the U.S., the 10-year yield for U.S. Treasuries below 1.50, record territory. I mean, unbelievably low. People are pouring into Treasuries. What you're seeing is a real concern among investors, among traders. They just want their money. You know, you figure Treasuries are a safe haven because it's a bond. U.S. isn't going to default. We hope they won't default. U.S. won't default on it. You know, you may not get any interest on it. You may be losing ground in inflation-related terms, but your money is safe. You are seeing a real flight to quality, a real flight to safe havens. People are just concerned with keeping their money. They don't care right now, at least, about return on investment. They want a return of their investment.
And, you know, we should mention, too, we've seen the worst drop from the Dow this year and wiping out the gains that we've had
Depending on where we end today, the Dow is right around where it started the year. The S&P is a little bit above it, but for the S&P, the important number is 1284. That's roughly the 200-day moving average, big technical marker. If the S&P kind of takes that out, we could see the losses go much further down. If they hold that, you might see a little bit of a rally into the close today. A little. I'm not going to say a great one, but you might. That's where the big battle is being fought right now. But yeah, the Dow is right at those 2000 and right where it started the year. So look, everything that happened in the first quarter, it's all been wiped away the last month plus.
And of course, still the troubles in Europe remain. So that's also a factor in the backdrop
that's
here.
going.
So that's
look,
even
and the real thing is that went nowhere all year, and it's going nowhere. It's not going away. That's the issue there. It's not going away.